Corporate taxation and exemption for government-controlled entities. Government-controlled entities play a pivotal role in the UAE's economic landscape by performing specific functions and operations on behalf of the government. These entities are distinct from typical government departments due to their juridical status, ownership structure, and operational scope. This section provides an in-depth explanation of their definition, ownership requirements, and the nature of their corporate tax obligations, particularly in relation to their designated functions and other business activities. Definition and ownership of government-controlled entities. Government-controlled entities refer to juridical persons that are directly or indirectly wholly owned and controlled by one or more government entities. Their establishment and operation are formally recognized and detailed through a cabinet decision. This form of entity structure is used when it is necessary to separate certain activities from the main functions of a government entity for reasons such as improved accountability, streamlined management, or the creation of a legal entity capable of entering into contracts, owning assets, and conducting business activities. Ownership and control requirements. To be classified as a government-controlled entity, a business must satisfy the following ownership criteria. 1. Wholly owned by government entities. The entity must be completely owned by one or more government entities, either directly or indirectly. This ensures full governmental control over the entity's operations, objectives, and strategic direction. 2. Control by government entities. Beyond ownership, the entity must also be controlled by government entities. This control can manifest through decision-making power, regulatory oversight, or the appointment of key officials within the entity. The creation of government-controlled entities often arises due to specific needs for management or operational autonomy, while still maintaining a close alignment with government objectives and regulatory frameworks. These entities may serve as vehicles for public service delivery, economic development initiatives, or specialized government projects, allowing for flexibility in management and execution. Mandated activities of government-controlled entities. Mandated activities are defined as those activities conducted by a government-controlled entity in accordance with the legal instrument that establishes or regulates the entity. These activities must also be explicitly specified in a decision issued by the UAE Cabinet. Mandated activities represent the core functions and operations that a government-controlled entity is tasked with performing on behalf of the government. They often align with broader public policy goals, such as infrastructure development, public utilities, or key economic services. Criteria for mandated activities. Not all activities conducted by a government-controlled entity automatically qualify as mandated activities. The determination of whether an activity is considered mandated is dependent on its inclusion in the legal instrument governing the entity and its specification in a cabinet-issued decision. This distinction is critical because it determines the tax treatment of the entity's operations. 1. Specified in legal instruments. The activity must be outlined in the entity's governing laws or regulations, which establish the nature and scope of its operations. 2. Cabinet decision requirement. The activity must be formally recognized as mandated through a decision by the Cabinet. This level of oversight ensures that only certain, well-defined activities are considered exempt from taxation. Corporate tax obligations for non-mandated business activities. While government-controlled entities are primarily established to carry out mandated activities, they may also engage in other business or commercial operations that fall outside their mandated scope. The treatment of such activities under the UAE's corporate tax framework is subject to specific rules and obligations. 1. Tax treatment of non-mandated activities. If a government-controlled entity conducts business or business activities that are not categorized as mandated activities, those operations will be subject to corporate tax. This ensures that only core, government-mandated functions benefit from the exemption, while other commercial ventures are treated similarly to private sector businesses. 2. Registration and compliance. For any non-mandated business activities, the government-controlled entity must comply with the relevant corporate tax registration and reporting requirements established by the Federal Tax Authority, FTA. This includes registering as a taxpayer, filing tax returns, and maintaining accurate accounting records. Example scenario. Consider a government-controlled entity established to manage public transportation in a major city. If this entity, as part of its mandated activities, operates and maintains public transit services under a cabinet-issued directive, it would generally be exempt from corporate tax on income derived from these services. However, if the same entity begins operating a commercial vehicle leasing service that is not part of its mandated public transportation activities, the revenue generated from this separate business would be subject to corporate tax. Rationale for taxation of non-mandated activities. The requirement for government-controlled entities to pay corporate tax on non-mandated business activities serves several important policy objectives. Ensuring fair competition. By taxing non-mandated commercial activities, the UAE promotes a level playing field for private businesses and government-controlled entities engaged in similar markets. Economic transparency. Subjecting non-core business operations to taxation enhances fiscal transparency and ensures that government resources are used appropriately. Compliance with international standards. The taxation of non-mandated activities aligns with international norms, which often distinguish between core public service functions and commercial endeavors of public entities.